Good time to get in our technical experts then. We're joined by Manav Chopra, Head of Research Equity at Indiabulls Ventures. Hi Manav, good afternoon to you and thanks a lot for joining us. First, a call on Nifty and Bank Nifty. It's been a weak trading day, so to say, after yesterday's week closing, but I think we're once again off the day's low. We did reach yesterday's low, but we're trading very close to the mark of 10,800. Manav, is that a very crucial mark for Nifty?
Yes, absolutely. At least on the weekly closing basis, 10,800 to 10,780 are the crucial support zone. And looking at a very short-term perspective, the trends, the Nifty and the Bank Nifty trend is showing some sort of an exhaustion. Mainly, we are seeing some sort of a profit booking which is taking at higher levels, and Nifty and Bank Nifty is not able to sustain key levels on the upside. So, there are some selling pressures which we have observed, and there could be some sort of a consolidation or corrective decline that could take place in next couple of trading sessions going forward. So I think on a very short-term basis, I think it's good time to take off some profits from the index. There could be a short-term decline close to the weekly support, which is now close to 10,650 levels. So that could be one of the levels where you could see a mean reversion, and from there on you could we could expect some higher base. So for Nifty on the immediate basis, 10,850 would be the resistance, and for Bank Nifty faces important levels. The important levels to look out is 26,450 to 26,500. I think these are the levels where it's facing stiff resistance and selling pressure. So in case if we see further price rejection at these levels, we could also see a test of at least 26,000 levels for Bank Nifty on the lower side.
Okay, that's the view coming in on Nifty as well as Bank Nifty. Let's see if the closing can come above that mark of 10,800 or not. Let's also bring in Sarvendra Srivastav, independent market expert, who joins us on the show now. Hi Sarvendra, good afternoon to you. What is your reading been, and where we've seen Bank Nifty actually underperforming Nifty, at least in the last two trading sessions?
Yeah, very good afternoon. Yes, absolutely. I think markets have been kind of stuck at these levels. So if you look at the last 3-4 weeks, the net movement has been minuscule. So last 3 weeks, we've been kind of being in this range around 10,800 thereabouts. So my sense here is that that's a sign of little distribution now coming in. So it's very clear now that around these 10,800 mark, give and take 50 points here and there, I think definitely there's some supply now coming in, which is visible, and now there are stocks, there are indices which are now starting to break their long-term supports as well. Not only the 200 exponential, but longer-term trend lines and longer-term setups have also started to now gradually break one by one. So we believe that yes, one more leg of downside is probably pending. And for the Nifty, I would say that we can fall all the way till 10,400. So that's been an area that we have been advocating. That's an area where you will test for strength. Once we went there and we bounced again, I think this time around also we are going there, 10,400. So if it holds after that, then well and good, or else then we will look at more downsides. But for the time being, 10,400 is the target. What I would recommend, you can probably go short around these levels. 10,800 on the spot is a good enough level to short. And keep a stop loss at 10,931.60 on a daily closing basis. So I think that with a 130, 150 point kind of a risk, there's a good risk reward happening here on the sell side.
Let's try and nail it down to specific stocks. Then Manav Chopra, I'll come to you first. In keeping in line with your view that you've just expressed, what are the stocks that you're recommending for the afternoon?
See, at the current levels, I have two picks. My first call is buy on Adanient Enterprise. This is mainly for a positional basis for at least a couple of weeks. The stock actually has declined from its recent peak of 220, and it has observed a good healthy decline of over 20-25% and has formed a good base near its long-term support levels. So it provides a very good risk-reward ratio for this stock going forward, and also we have observed a good weekly breakout with above average volumes. I think looking at both these parameters, I sense that the stock has validated a bullish breakout, and going forward we could see some sort of an outperformance in this. On the lower side, 128 is an important support, so we recommend a buy into this with a stop of 126, and we expect upside target of 145. My second call is sell on Hindalco. Basically, the stock, after a good short-term consolidation, has observed a breakdown today on the daily charts and has also breached key support levels. And the momentum indicators are also indicating some sort of a weakness. So, this trade could be initiated for a view of 3 to 4 days. One can keep a stop of 240 on the upside and expect lower targets of 223.
Okay, those are the individual stock trading ideas coming in from Manav. Sarvendra, what about you? What are you betting on?
As usual, 3 trades that we get, and since we've taken a positional view on the Nifty that we are probably headed down, all the 3 on the sell side, first being from the financials, the housing finance names, DHFL, where we believe that 635, 640, that's been a range now which the stock has not been able to break out of over the last couple of months now. So every time it goes there is selling. I would say that this time around we are headed again back towards that 570 lows that we printed last month. So 570 is the target for DHFL on the downside.
Okay, I think the link has frozen, but let me just try and get Sarvendra Srivastava's stock ideas for the benefit of our viewers, and then we'll get Neeraj Dewan. So he's got a sell call, I believe, on one of the companies, DHFL, I think. Let's just get the calls out here. So Diwan Housing is a sell call from Sarvendra Srivastav. So look at that stock. That one is down, and the target is about 570. So that is one. Okay, I think we have Sarvendra back. So Sarvendra, Diwan Housing is one. Which is the other one? And sorry, if you want to finish your point on the DHFL, then do that as well.
Yeah, DHFL, I was saying that it's always got stuck at 630, 640. So this time around, I think 570 will again get retested. So the lows that we printed last month. So a sell with 570 in mind, with a stop loss kept at 640, 610. All my stock calls today will have a hourly closing stop loss. So anybody taking that trade should keep an hourly closing stop loss and not a tick stop loss. The second trade that I have is Arvind, where we have a medium term to long term nice little distribution pattern, and I think initially we'll test the neckline, so or slightly go lower as well. So I would say that 370, 365 is where Arvind should head for, and these are all spot levels. 425.60 is where I will keep a stop loss for Arvind, again on an hourly closing basis. And the last one is from the pharma space. This is an odd name. The pharma space has been moving, but Ajanta Pharma has pulled back right towards its neckline of a large head and shoulder formation, which it broke a couple of months back, and post doing that it sold off. So a copybook pullback to a neckline. This is a copybook pullback happening. It's the normal pattern that repeats on the pattern many a time. So with the neckline pullback, I think the pattern seems even more copybook and complete. So I don't think that it will be able to go much past that neckline. There can be some choppiness and whipsawing on the neckline, but my sense is that the stock will eventually fall back towards that 900, 950 mark. So I'm saying for this round, take a target at 980. Short sell Ajanta Pharma and keep a stop loss. The stop loss is very nearby, 1151.60, and again on an hourly closing basis. And as a thought, all my levels are on spot. So Nifty stocks, all the levels are on spot.
Okay, a sell on Ajanta Pharma, but that stock is actually doing pretty well in today's trading session. It's seen good gains. In fact, it's sitting with gains of nearly 6% in trade alongside the other pharma counters which have been doing well. Okay, so those were the technical trading ideas, but also let's also get some fundamental view going from Neeraj Dewan, who's a director at Quantum Securities, who joins us on the show now. Hi Neeraj, good afternoon to you, and thanks a lot for joining us today on Bloomberg Quint. First up, a word on the markets. It's been volatile in the last few sessions, but at least for the benchmarks, Neeraj, we've seen a good recovery coming in, and a lot of talk around the macros now. We've seen the rupee also touching the mark of 68 today. Do you think the second half of the year could be more about consolidation now?
Yeah, good afternoon. I think, if you look at the kind of movement we've seen from the bottom, we saw Nifty coming back from 10,400 to 10,900, which was a good quick recovery. So I think what is happening now is some profit taking, and again, Bears is trying to make a comeback with, you can see shorting across PSU banks, which is one of the favorite darlings of Bears, which have been giving them money. So they're back at it again today. So I feel that what you're saying is right about the rest of the year. So like in the early part of this year or end of last year, we were getting so many mid-cap ideas, so many stocks were doing so well, and left, right, and center, every stock was going up. So I think that will not come back, and market will become more and more narrower now. So there will still be money to be made because there is a lot of pessimism around, and there is definitely some recovery which is visible as far as the economy is concerned, and there are definitely some positive factors as far as the economy is concerned. So there will be money which will still be made, but it will be very narrow. So you'll have to be really in the right stocks, and you have to stay invested for a little longer time, and you won't get those free lunches that we got in the beginning of the year.
You certainly won't. Neeraj, good afternoon. Thanks for joining in. We were trying to talk about pockets which are exhibiting strength or weakness or otherwise. And now, the most common topic these times around is pharma. The last few days, it's just been a one-way ride. My question only is, if you were to pick up an exporting theme, leave aside pharma, an exporting theme, it could be pharma, it could be IT, it could well be an auto comp or an auto anch. Where is it that you find the risk-reward favorable currently?
I think pharma, I feel that because the stocks had corrected a lot, whether you see the likes of Sun Pharma, Dr. Reddy's, Lupin, they have been down in the dumps, and they really destroyed wealth in the last couple of years. So there will be some reversal because of some positive news which is coming. So there can be some bounce backs there, and which may extend a little bit more from these levels also. But I think somewhere, whether it's globally or domestically, pricing pressure is there. So that positive pricing pressure pricing that they had earlier is not there anymore. So they're going to be pressure there. So I'm not very positive on pharma, but I will still like some research-based companies like a Natco Pharma or a Cadila, or even healthcare for that matter. But coming back to your point of exports, I think exports will be again very, it'll be crossed. I will not say that you pick one or two sectors, but I think you have to pick stocks in different sectors. Something like a specialty chemicals, some textile companies are doing well, and auto ancillary also some are doing very well. So in IT, I think I would go for a more diversified, little larger mid-cap companies which have a very diversified model, and they can adapt very well. They can go in different geographies. So I think there also you get bets. So you'll have to have these 4-5 sectors and pick up strong companies there as if you want to play the export theme.
So what are you picking up, Neeraj, if I can push there, because I remember all through the years that we've interacted, you've come up with some fairly interesting auto ancillary names when those stocks were not even known, and they've turned out to be really good multi-baggers. I'm laying the gamut wide open for you on the exporters side. What is it that you like currently?
See, as far as our exporter side is concerned, we keep on coming with different ideas which will now or sometime will be doing well already. But if you have to pick something which we've really researched recently, that would be Shoppers Stop, which is not at all export based company. It is all to do with domestic consumption, where you've seen retailing has been growing. So Shoppers Stop is among a top pick there, and we like companies like JT-KT, which are into auto ancillary, which was earlier Sonakoya Steering, which right now has a 40-45% market share in domestic market, and now with the Japanese management coming, they are trying to increase that market share back to the earlier levels, which was 60-65%, but that will only happen gradually. But what JT-KT wants to do is they want to make in Sonakoya, which is now JT-KT India, as a base where they can even go for global tenders. So for an upcoming company which can have a good potential for exports from India, JT-KT will fall in that category.
One, the Japanese and the focus thereof. Two, what do the numbers look like, Neeraj? I mean, was there a divergence recently which has gotten resurrected, and how do the next 2 or 3 years look like? Neeraj, can you hear me?
It's again gone.
Okay, I think we've lost that
okay,
line.
can you repeat it? Because
I was just asking you for both the ideas that you just shared with us. One is, of course, Shopper Stop, and some rationale there. Would it be the Amazon factor that is helping them? And two, more importantly, for this other stock, JTKT that you mentioned, what are the numbers looking like? I mean, what's the size, what's the scope that you believe could be there for the company 1 year out, 2 years out, 3 years out?
See, what is happening is that this company, JTKT, has two joint ventures in India, which was earlier with Sona Koyo. So, they'll merge this company. They've already started the process to merge it into JTKT India. So that will increase their profitability by about 60-70 crores. And what is happening is that they already been getting the debt down, and they had about 130-140 crores of debt, which they're going to replace with a foreign debt. So interest rates will come down there. And we're valuing this company at 10 times EV/EBITDA. So at 10 times EV/EBITDA 2 years forward, we're getting a target of close to 170, 175. So that is the kind of return we're talking about. So that return is on the basis of rationalization of cost, merger of those two companies, and their market share in all the new Maruti models at 60% incremental, whatever models come. So all that will help in improving their EBITDA margin, and profitability will increase because of interest rate and cost rationalization, which the new Japanese management is doing right now.
Neeraj, what's making you bullish on Shopper Stop, a company where margins have always been in that range of 4 to 5 or max 5.5%? What sort of an upside do you expect for this stock, and where will the growth drivers be coming from for Shopper Stop?
What has happened in Shopper Stop in the last 2 years, they've gone to a restructuring where they've sold the loss-making entities. One is Hypercity, which they sold to the Future Group. Then they've got rid of their Time Zone and Nuance. So they're all small losses, or they're just barely breaking even. And Hypercity was the one which was having a major loss. So they've been able to get the debt levels as low as 80-82 crores now by the end of last year. Plus they have been opening small format stores in the beauty segment, which right now become almost 120. So out of a total stores of 240, 115 are specialty smaller format stores, and about 83 are the larger format stores. With the smaller format stores coming into picture, the sale per square foot will improve for them. And they've spent some money in the last 2-3 years on their omni-channel to increase their online sales, because they are into larger cities right now. And to capture the growth that is happening in smaller cities, they're increasing their presence in online. So they had a 5% stake sale to Amazon also, which is also helping them to go into the online sales. And with 1% sale, they are targeting 10% of sales from online channels. So that will also help improve their sales going forward. And with the loss-making entities going out, the ROC is improving a lot. So we are targeting that the company will reach a ROC of 21-22% by FY20, based on just these 2-3 things that they've done recently.
Interesting. One question on the insurance firms, Neeraj. The month of May wasn't the best for them. We were just talking about it a while back. All the private insurers are at least 10-11% down from the highs. Not to say that they are undervalued. Even at these levels, many would say that the valuations are still steep. Do you like anything in the life insurance space? No, Neeraj, can you hear me? Oh, I think we've lost that. While we wait for Neeraj Diwan to come back, let's go on to the chart of the day. Agam Vakil is standing by with an analysis on select mid-cap players that may be undervalued, but analysts still seem to be upbeat on them. Analysts, or rather, Agam, over to you.
Well, that's right, Neeraj. So I tried to look at a study, considering it's so hard to find good bargains around. I wanted to understand whether or not there are undervalued stocks out there, and whether or not some of these stocks actually have, well, at least a consensus with them on the upside. So through my study, I have a list of 5 stocks which could potentially see further room for upside. Let's start off with something like PTC India. It's currently trading at around 5.3 1.13 times price to earnings forward, 12 months forward, and still below the 5-year average. And it offers a 42% upside potential right now. And this is on the back of 10 out of 10 analysts who have a buy rating on the Bloomberg consensus. Coromandel International similarly currently trading below its 5-year price to earnings ratio of around 19 times, offers an upside potential of as much as 40%. We have NBCC India, which has seen a steep correction, along with Bharat Electronics as well as VA Tech Vabag. All of them have recently participated in the mid-cap correction, and because of that we've seen this forward price to earnings ratio fall to a certain extent, and for all these three cases we've seen them trade below the previous 5-year average of price to earnings ratio. Along with that, we're also looking at a 37 to 38% return potential from current market levels for these three as well. So we're going to have to wait and watch whether or not some of these stocks see a little bit of reversal, and we do see an up move from current market levels.
Okay, we'll watch out for some of these. Thanks a lot for that, Agam. Well, maybe before I ask the insurance question to Neeraj Dewan, a question on some of these, a couple of interesting names out there. Neeraj, companies like Coromandel, the whole, DBT was supposed to benefit that entire pocket. Managements were fairly confident. Somehow, the numbers the last couple of quarters, or at least the last quarter, if not the last couple of quarters, left a bit to be desired, took its toll on the stock. It's come off quite materially as well. Any observations here?
You're talking about Coromandel fertilizer?
Yes, I am.
Yeah, basically I think that is what is happening with most of these fertilizer stocks. I think we've also tried and figure out fertilizer stock which are present in chemicals also, because chemicals is the only part which is making the money. Fertilizer is very volatile as far as earnings are concerned, and with the recent whatever happened in China with the shutdown of facilities, so last 1 year they have been gaining. So I think there we are avoiding stock which have more of fertilizer and less of chemicals, and trying to figure out stocks which have more chemical and more EBITDA and profitability coming from chemicals as such. So among this space, we've really trying to demarcate and pick out those stocks.
Okay, there's been a bit of recovery for Nifty, and I guess heavyweights like Infosys, I think the stocks moved higher and it's almost at days high if I'm not mistaken. Let's just pull up Infi and check what that's doing. Yeah, it is at days high, sitting with gains of 2.7%. Simultaneously, even TCS went up, but I think it's cooled off a bit from the highs of the day. TCS now sitting with gains of almost 1.5%. Manav, on the charts, the move that we've seen for both these stocks in the last 5 to 10 minutes of trade, is it looking interesting? Can one look at taking any trade on these stocks?
Yes, absolutely. The overall trend for the IT space has been quite positive, and we did see some sort of a short-term profit booking that took place in last couple of trading sessions. And most importantly, Infosys, has bounced from its very short-term support levels and has also exceeded its key intraday levels high. So I think at the current levels, we can still expect some sort of a momentum to go on the upside. We could see the levels of 1330 on the immediate basis, which could be in next couple of trading sessions. A stop of 1240 could be placed in stock like Infosys. In fact, HCL Technologies looks very well placed. The stock after giving a breakout today, it is again testing its important support of 930. So the risk reward ratio definitely looks quite favorable in HCL Technologies. One can still expect an upside of 960 to 970.
Flash. Okay. By the way, just a chart check before we get the news will come up on your screen.
Neeraj, we've got the press release here.
Yeah, the press release with you. Okay.
Yes. They've announced 16,000 crore of buyback, where they'll be buying nearly 7.6 crore. 7,61,90,466 shares from the market, and the price for that they've given is almost 2,100, which means that this is almost 1.99, almost 2% of the total paid up equity which is there for the buyback. But we'll definitely get more details with regard to what the plan is with regard to participation. Remember that that will bring in a lot of more color with regard to the acceptance ratio. If Agam Vakil is here with us, let's go across to him to get more details on this buyback. Agam?
Well, Navneet, you were just already told us that the buyback is going to be carried out at 2,100 rupees per share, and this is largely as per expectations with respect to at least the price. Now, we were working with an expectations of anywhere between 2,050 to around 2,150, and it's come bang in between this one. Again, at 16,000, as I was suggesting in the mornings, because the reports were saying 10,000 crores, that number is slightly lower, and we are looking at 16,000 crores. That again is largely in line with what we've seen in the previous year as well. What remains to be seen now is the allocation for the rest of some of those reserves. So we did see as much as 11,000 crores given in dividends as well, and we're going to have to see what the AGM tells us a little more about with respect to the dividend policy this year around. Do remember that TCS has already given us a bonus of around 1:1. So that is already building on the expectations for a lot of these investors. That said, we're seeing a sharp uptick for several of the other counters as well. So it's actually becoming interesting whether or not we should start seeing some buyback announcements for some other companies too.
2.5%. The price, Agam, would have taken you slightly by surprise. I mean, I know in the morning you said that 2050 is an outside chance, but 2,100.
Right, absolutely, Neeraj. So it comes to roughly 17%, not unlike the 16% we saw in terms of the premium as per the market price on the day the buyback was announced. And again, it's going to come down to the capital allocation policy. Now that this is out of the way, all eyes will be on what the dividends are going to stand in, and as well as, of course, the plans for the company going in.
More or less, the amounts seem to be in line with what they'd done earlier as well. Agam, thanks for putting that into perspective, at least the buyback amount. Neeraj Diwan is still with us. Neeraj, what do you make of this? Quite unlike the last time, wherein the valuations of TCS were substantially lower when the buyback was announced. Now these stocks aren't cheap, and the buyback is being done at a reasonably hefty premium to the current market price as well.
Yeah, I feel, the kind of uptrend we've seen in the IT stocks and the kind of, rupee, what is the moment we've seen in the rupee, I think there is, and the growth figures that are coming from US, where they come, large part of the business comes from there. So I think there is definitely a earning improvement which is also visible, and which may sustain for the next 2-3 quarters. So I feel that, though buyback is coming at a good price, so that will support the stock. But I think otherwise also, barring leaving this buyback aside, I think there is definitely a case for IT to continue the uptrend which we've seen recently. So one needs to pick, so among the larger space, definitely TCS still looks one of the better ones, and among the larger mid caps also, you have enough opportunities where you can make money in the IT space.
Neeraj, following that policy of distributing 100% of free cash flow would also mean that it could lead to some sort of expansion for ROE. Do you think then, policies like buyback, it's just within a year they've announced the second buyback, the first one was last year, this could be a precursor to any sort of re-rating, also factoring in the valuations definitely command a premium when it comes to TCS as compared to the other IT companies?
See, this will definitely improve the valuation better, because just keeping idle cash, if you don't have any opportunities for any inorganic expansion available for you, and the company generating enough cash to take care of the normal growth which they have every year. So I think it is a very good strategy where you should utilize this extra cash and give it back to the investors, shareholders. So I think which will improve their returns, improve their returns further, and definitely increase the multiples which the stock has been getting earlier.
Advise the retail investors holding TCS to tender their shares into buyback?
I think some profit can be booked because the stock has seen a good move. But I think if someone has been a long-term investor and has been holding the stock for a little longer term, he can continue holding, because we've seen TCS will keep on rewarding the investor. And for a long-term investor, it is good to stay in blue chip, large cap stock, and some part of the portfolio has to stay there. So this is among one of the best stocks there where one can stay invested also.
Stay invested but book partial profits is the advice coming in on TCS. Thanks a lot, Neeraj, for joining us today. Have a great weekend. Well, good moves seen for these IT stocks, and that's clearly given some sort of fillip to Nifty as well, which has recovered majority of its losses. Nifty is right now above the mark of 10,800. We'll slip into a short break here on Countdown. On the other side, we get you the Fab 4 stocks of the day at 3:15 p.m. We also tell you what the dealing rooms are recommending in trade and also get you some closing strategies at 3:20 p.m. Stay tuned.
All right, welcome back to Countdown right here on Bloomberg Quint. 26 minutes left for the markets to shut shop. Let's just bring up what the global markets are up to before we get into the Fab 4 stocks of the day. Europe has started off mixed bag. FTSE's down about 2/3%. CAC and DAX marginally in the green. Actually, CAC about 1/3%. DAX lying very, very flat. So it's a mixed bag for the European markets for now. However, our markets have moved back into the green. The Nifty 50. About 6 points in the green. The Nifty Bank, though, stays about 0.5% lower, but the Nifty intraday chart should be interesting. Nifty and the Sensex up about 5 points and 15 points respectively. So bring up the Nifty intraday chart. A bit of a pullback that's coming into our markets in the session today. Okay, time now to get to the Fab 4 stocks of the day, and let's try and find out what's made it to Yash Upadhyay's list. Yash, good afternoon.
Good afternoon, Neeraj. So the agri stocks, they had been under some selling pressure over the last 4 trading sessions, UPL being one of them, but it's up almost 3% after Deutsche Bank in its report maintained their buy rating on the stock with a target price of 890 rupees. Now, they believe that the recent concerns over the depreciation of Brazilian real against the US dollar, which is down almost 12% on a quarter-on-quarter basis, are overdone. That apart, they believe that their EBITDA margins would improve driven by backward integration, and that on the back of this, they prefer UPL over any other agri-input stock in the country. Alembic Pharma is up 2.5%. At one point in time, it had surged more than 8% after the company said that it has received the US FDA's establishment inspection report for its Panelav formulation unit. On Thursday, it had received another drug approval from US FDA. So all in all, a lot of good news coming in for Alembic Pharma. TCS saw a sharp surge. It's up about 3% after the board approved the buyback plan. Now, they will be buying back close to 7.5 crore equity shares at a price of 2,100 rupees, which is at a premium of 17% to its previous day's close. And finally, the sugar space was buzzing in trade as well. We saw a lot of the sugar stocks see a sharp spike. Sri Renuka had 1 point gained close to 19%. Back to you.
Well, thanks a lot for that, Yash. We will watch out for some of these. Sarvendra, I want to draw your attention to Growth Finance. You know, NBFCs by and large have had a mixed week, but a fairly impressive stock like Growth Finance this week hasn't had the most impressive weeks. What do the charts suggest to you, if they suggest anything?
No, absolutely, they do. I think this was the late bloomer within that housing finance space. And now I think more or less, I think the targets, long-term targets also the stock met. And post that, we are seeing this correction. So I will continue to believe that the correction will last. And today we have broken some important swing lows as well. So my sense is that we could probably go all the way down towards that 280 mark. So another 40-45 points off on the stock is what I believe it will do.
Okay, that's the technical check coming in on Growth Finance. A lot of stocks are moving around, and we did highlight MRPL, which has touched 52-week low and one of the top losers among the FNO securities. Very quickly, Manav, on the charts, if somebody had taken a short position, let's say in the morning today, would you suggest them to book profits, or one can trail stop losses here?
I think looking at the current levels, one should surely book some profits, because the prices have also managed to break below its recent lows, and you know the stock, after a good series of decline from its highs of 123, is at its deep oversold level. So any short-term bounce back can come back in the picture, but the ideal strategy for this stock would be a sell on rise approach would continue. The momentum is still weak. I sense that around 90 to 93 will be a stiff resistance. So somebody who also wants to maintain a trail stop loss, I think going forward 93 should be the trail stop loss for this stock.
Okay. By the way, just before we get in Anand Tandon, want to get in Sarvendra's view on large cap IT as well. We spoke to Manav about it. TCS, the market cap is back about 7 lakh crores. On a closing basis, I presume this will be the first time that we'll be having TCS close if it indeed stays at this level. But Infosys too has caught on to some of the fire. That's up about 3%. I wonder if the rest of the IT pack is doing. We're wondering what's leading this charge higher on the index. It's got to do IT. And almost all of those large cap names have moved up. Would it be a case of everybody believing that the others will follow suit? Well, maybe so, and we'll talk to Anand about it. But Sarvendra, on the charts, the top 4 large cap IT names, is there a trade in any one of those?
Yes, they were. I think now the trades that are there are all short-term in nature probably, and you will play small little breakouts for, say, Infosys. If it is able to clear 1300, then a small trade definitely emerges there. But I think the best of the run is now 70-80% of the run is already in place, because if you remember when we were doing the closing weekly shows, around 9500, 9400, we were the first to call an IT bottom on the Nifty IT index. From there, from 9-10,000 odd levels to 14 odd thousand is a substantial move for a large cap space like this. So my sense is that 80% of the move is already in. From here, it gets into that risky territory in the sense the risk rewards will not be that favorable long term. But for short term players, it will keep on giving you opportunities because the underlying theme to this move now will be the USD INR, where we believe that we are headed towards 70 to 73. So at 68, and then another, you look at another 400, 500 points on the currency. I think IT and Pharma will definitely get a positive brush. So I would keep on trading. So I would say TCS, I could see another 100 odd points on the upside. So anybody wanting to take that trade till 1950, 2000 should have a stop loss below 1800. And for Infi, my trade will get triggered once it gives you at least one close above 1300. So I would say these two names I will definitely like to trade on the long side. Rest I would slightly avoid at the moment. But these two names and the index itself towards 14800 definitely possible.
Okay, let's bring some fundamental view on the IT pack then, which has just gone up in trade. Anand Tandon, market expert, joins us on the show now. Hi Anand, good afternoon to you. What did you make of the buyback price that has come in? Did it surprise you? It's slightly above with what the street was expecting. They're looking to buy back nearly 1.9% at 2100 rupees per share.
Well, I mean, there is only one way of reading it, which is that the management is keen to signal that the business is doing reasonably well, cash flow generation will be good, and this is perhaps in lieu of any significant dividend that the company may give. So this is a way of returning money to the shareholders, all of which is reasonably good news.
Well, definitely, Anand, it is good news, but what would your advice be, considering the stocks have rallied so much now? Would you advise the retail investors to tender their shares into this buyback?
Well, I mean, there is no reason why one should not. Not that you would expect to get a lot of it bought back actually. But the benefit of a buyback is not necessarily in terms of what exactly you get, but in the fact that the overall equity size reduces and therefore the valuation of the company can sustain at higher levels.
Okay, well, that's about IT, which is contributing in today's trading session. What else has gone up? Well, Britannia, that's up almost 2% in trade. Britannia is now trading above the mark of 6100, and if I'm not mistaken, these are fresh highs for Britannia too. So almost a day's high for this one. Anand, no stopping for a couple of these FMCG stocks which have been touching their life highs from Britannia. You've got HUL also doing pretty well. Do you think it's time to book profits, or one should stay put in these FMCG companies at a time when expectation is that the rural growth is going to recover in the quarters to come by?
Well, the rural growth, not so much the growth as the fact that there will be more money in the rural system, and therefore purchasing power certainly goes up. I would think that the best beneficiary will not be so much biscuits as liquor. And I think you will find that the liquor companies will actually do quite well, especially those who have good distribution in rural areas. That said, I think consumer is the one space that everybody has been going after. If you ask me, is it overpriced and overbought? The answer is clearly yes. Will it necessarily fall off a cliff right now? Not likely. So I think, is it time to actually start cutting back? I would think so. But, it's not likely that the consumer story will run out of steam anytime soon, because there aren't too many other stories right now.
Okay, so still bullish on the consumption pack, but Anand feels that the liquor companies are going to benefit more than the biscuit makers. And Anand, 2 days back, I think Bloomberg broke the news that Carlsberg is looking to list in India. We don't have much details with regard to how much money they're about to raise, but what do you make of this news?
You're going to ask me that question. I don't think Anand heard you.
Okay, Anand, I was asking just 2 days back, Bloomberg broke the story that Carlsberg is looking to list in India. I just wanted to check, since you're bullish on the liquor pack, what do you make of this news?
Well, if they do list, it will be one more option. But, it's not as if you're looking at other markets right now. The reality is more money that goes into the rural India, especially in the form of income transfer from the government, the greater the propensity of rural markets to actually consume liquor. And for example, we've seen this in the state I am in Telangana. We've had a transfer of income, and for pretty much nothing to the farmers. And I believe the collections in terms of taxes on liquor have actually shot up quite significantly.
Okay, stocks which are at new highs include companies like Britannia, which is up about 2.5% today. So 6148. Well, about a quarter ago it was at 5,100, 5,200. Good going there. That's of course, the menu matter coming in for the TCS AGM as well. Chandra and Rajesh just entering the venue, I presume. We'll of course keep on getting you updates about any other decision that is material enough to come in. But having said that, let's focus on companies which are moving around. Last 15 minutes of trade left. Britannia is the one that I was talking about, 6154. Big move there. There is strength in Bajaj Finance yet again, 2281. At the start of the week, we spoke about how the juggernaut rolls on, and well, it continues to do that, 2281 and counting. Jubilant Foodworks is up 1.5%. And not to be left behind, Reliance Industries is putting in some gains as well, about 1% higher at 1,017 on a closing basis. This would be fresh highs for Reliance Industries as well. Anand, valuations notwithstanding, the likes of Britannia, Jubilant, HUL, etc. keep on finding buyers, and obviously these are not moving because of retail money coming in, or arguably even H&M money coming in. This would be institutional money getting into these names. It's amazing how the expensive names keep on finding buyers at every single point of time. Forget a dip. Almost every single month, they're finding in new money.
Well, what is happening is that institutional money is becoming dumber as we go along, because a larger part of it is becoming ETF based. And ETS by its very nature is a momentum player, because all that you do is buy a particular index and a basket of stocks. So it doesn't really matter what is the valuation. It doesn't matter about how the company is doing. If it's part of the ETF, then the allocator will actually put more money into it. So as the institutional money becomes dumber and more ETF based, you should expect to see these kind of wild valuations at one end, and equally wild on the other end, where smaller companies which are perhaps not so much on the institutional horizon will perhaps go very cheap. So at some stage this will get to an extreme, and you would find that it would be better off not being an institutional player, because you should be able to make some money out of this arbitrage. But I think we are still some distance from there.
Okay, stay on, gentlemen. So much more to talk about. It's time to get you, one, what dealing rooms are recommending in the session today, and two, stocks that could enter or get out of the F&O ban. Let's start off with Darshan, who joins in with his sense of what his channel checks are suggesting to him. Darshan.
Yeah, so the first stock that's been spoken about is Hindalco. Some of the HNIs are actively accumulating. It's down almost 4% in trade, but there's a buzz of a potential corporate announcement that could come in. So that's something that's keeping Hindalco occupied. Heavy volumes of almost 7 million shares on the counter currently. The next one is Infosys, again trading at record highs, and you can see the traction that's there clearly on the IT space. The valuation gap between Infosys and TCS is expanding, and it's high time dealers believe that Infosys will play catch up to TCS at this point of time. And also look at how the rupee is panned out. So IT stocks as a pack is doing well. Infosys is something that's been spoken about, and Bajaj Finance, no doubt, it's at fresh record highs. Dealers believe that the momentum trade will continue on Bajaj Finance, and they like the counter.
Well, certainly showing in the momentum boys list is Bajaj Finance. Darshan, thanks for putting that into perspective. Navneet, what about stocks that could enter the ban or get out of the F&O ban?
One stock, Neeraj, which is likely to come out of the F&O ban for Monday's trade. Watch out for Balrampur Chini. I think that's also moved higher in trade. If you look at the total open interest as a percentage of market-wide position limit as of yesterday was at about 80.3. So it was very close to coming out of the F&O ban. For a stock to come out, remember, it has to breach the 80% mark. And if you look at the data on the option side, there's been more unwinding which has taken place. So watch out for this stock, and it's also moved higher in trade. It's up almost 4.5%.
Well, chugging along strongly. Manav Chopra, this action or the charts otherwise, Balrampur Chini, any thoughts here?
See, the stock actually is trying to form a base at the lower levels. On the lower side, 70 is an important support zone, but on the upside, 76 is a very stiff resistance. I sense that, the way it's forming a base, we could see a spike on the upside. So for a very short-term play, one can look to buy at the current levels. Looking at the overall formation, we can anticipate a break on the upside because the prices have been forming a complex inverse head and shoulder pattern. So going forward, I think we could see a rally close towards the levels of 84 to 85. Keeping that in mind, the risk reward ratio is also quite favorable. So looking at the overall formation, I think 60, keeping a stop at 70 could be quite well placed for a near-term perspective.
Frankly, if you put up the sugar price chart as well, it is forming a perfect U. The stock, the prices have just come back to the levels from which they started off falling as well. So good going there. A stock that spiked in the last few minutes is Muthoot Capital. That stock is up about 5%, but it's not just today's move. Look at Muthoot Capital over the last few days. Maybe a 7-day or this month chart of Muthoot Capital would be interesting. Bring that data chart, that 1 month return of about 18% on Muthoot Capital, certainly revving up and doing very, very well for itself. But it's that time of the show where we get in closing strategies from our experts. Sarvendra, I'll come to you first. If you had to bet on one strategy, index or a specific stock, what would you choose?
I will go with a stock, and I will reiterate and again choose Bajaj Finance, where we already have a positional trade open, which we did last week. My sense here is that Bajaj Finance should head for 2400. That's been our base case from the time it broke out at around 2180, 2200. So I would say anybody wanting to do a trade for tomorrow as well, I think Bajaj Finance makes a lot of sense. It's going past the swing high that it printed 3-4 sessions back. So we are clearly past that number now. 2277 was that high, I think, and we are now closing well past that, 3-4 points past that. So this will validate as a breakout. We are headed towards 2400, so that could take 2-3 sessions. So anybody wanting to do that trade as well, you can keep a stop loss below 2250 and do that. Anybody wanting to do BTST kind of a trade, then you should be looking in for a target of 2300, 2310 for the next session. And in that case, you'll have to keep a stop loss below 2265.
Okay, Manav, what about you? Your closing strategy?
See, at these levels, looking at the momentum play, Jubilant Food definitely looks very attractive. It has given a breakout today after 4 days of consolidation. The overall trend is bullish, and most importantly, today's volume is above 20-day average volume. I sense going forward, 2850 would be the immediate targets that one can expect, and the stock can actually also cross the levels of 2900. But the ideal strategy should be one should maintain a positional stop loss into this. I recommend 2720 as a positional stop loss for this stock, and one can look to ride the trend.
Okay, so those are a couple of strategies coming in from our technical experts. Let's pull up Tata Investments. That's another listed company, I think, which invests into other companies. It does have some very minute stake in Tata Sons as well. They hold almost 10.5 lakh shares. The market cap of this one is about 4950 crores. This too has gone up, I think, after that buyback news which came in from TCS. It's one of the promoter entities, but the stake they hold is only 10.5 lakh shares. So watch out for this one. Their stake is worth nearly 200 crores in the company. I also want to pull up the intraday chart of Nifty Metals Index. Darshan highlighted Nalco, but there are a couple of other metal counters which have lost in trade. It's off the day's low definitely, but still Nifty Metals Index is down almost 1.5%. Pull up stocks like Jindal Steel, Hindalco, all of them have seen substantial cuts. Even something like NMDC and JSW Steel, all these stocks are sitting with cuts of between 2 to 4%. Anand, any thoughts on metals, which has been doing pretty well since last 1 to 1.5 years because of the commodity cycle turning?
Well, I think, large part of whatever has to be discovered is in the price. There is no doubt that this year the earnings will still be good, but I'm not sure that will necessarily translate into the kind of price increase that we saw in the past 1 year, where, you came from a stage where most of the funds didn't own that stock, the stocks were beaten down, and there was an increase in the earnings because of the tariff hikes. Now that is pretty much discounted, I think. So to a large extent, I think you've seen most of it. You'll still probably get some secular growth for at least a couple of more quarters.
Okay. Watch out for them. Anand, what's the view on the big boy, Reliance Industries? You normally don't talk about stocks. I'm not asking for a buy or a sell. But a few days ago, or a couple of weeks ago, there was a hint of a possible listing of the consumer businesses of Reliance that adds to the growing strength in both the retail and the telecom verticals, which just enhances Reliance's status not as a pure play oil and gas name anymore. What do you do here?
Well, I think, the retail may actually come out because it is something that is perhaps now beginning to make money and may not require the same kind of fresh capital going forward. I'm not sure that it is easy to take out telecom because telecom losses will continue. Of course, the company is showing reported profits, but that's because of somewhat strange accounting. That said, the money has to continue to be flowing into it because with a 20% revenue share, I don't think that the ambitions of the company will be satisfied. So I would expect to see continual pressure in terms of the overall industry revenues as the tariff war continues. And therefore, I think it's a little premature to expect a telecom listing. If it happens, actually, it will be good for Reliance overall because that will put less pressure on the balance sheet. The business per se in terms of refining and petrochemical should be doing okay, but we are looking at another phase of investments in terms of deep sea kind of exploration, and that's always extremely costly, not necessarily something that would do very well for the company in the near term.
Okay, Reliance Industries is up for the week at least. We've seen gains of 3 to 3.5% for the week, and today it's sitting with gains of nearly closer to 1%. And then we'll leave it at that note. Thanks a lot for joining us today and have a good weekend. While talking about the markets, Oracle Financial Services, that's the counter which has gone up in the last 5 to 10 minutes of trade. Let's just pull up that stock. It is also in the futures and options market. Manav, on the charts, is there any fresh breakout that you're seeing for Oracle Financial? It's sitting at day's high.
See, looking at the charts, basically the stock has seen a good momentum recently, but I sense we need some more confirmation. The oscillators also on the high time frame charts are showing some sort of a consolidation. So even at the current levels, in case if the stock manages to sustain these levels, we need to see at least a weekly close above from the current zone. So I recommend that one can actually avoid this stock for at least for next couple of trading sessions, wait this stock to cool off, and then eventually we take a call.
For the time being, Sarvendra, any thoughts on Piramal Enterprises? That too has gone up in last 5 to 10 minutes of trade. It's now trading above the mark of 2,500.
I think this one definitely is a stock where short to medium term, you could probably have had a small little bottom in place. So from there, it's from 2,300 odds moved to 25. So 200 odd points already moved in. So for a short-term trader, I think the risk rewards not that great now. So best avoid it till it crosses the long-term setups. I think the trade is not there. It would be a range between 23 to 25.50. So by and large, we are at the upper end of this range. So either side this range breaks, I think there will definitely be a trade. But till that is not happening, it is best avoided.
Okay, best avoid the counter, but it's gone up in the last few minutes of trade. The other one which has been doing quite well throughout the week is actually Strides Strassen. I know the entire pharma pack has been doing well, but this one in particular has seen some fresh longs coming about in the last 2 to 3 sessions. Well, almost 3 minutes to go for markets to close. Let's head across to Neeraj Shah to find out how today's closing is panning out. And Neeraj, the picture is looking better than what we've seen throughout the day today, and it's owing to the recovery seen for stocks like TCS and Infy.
Yeah, completely. You said it all, really. So the green largely because of what's happened to Nifty IT, which was, well, in a manner of speaking, culprit as well yesterday's session for putting the indices down. The Nifty Bank still reading about 0.5% lower. No big recovery there. I doubt that the mid caps and small caps would have turned around equally fast. So no, down about 1%. In fact, they worsened. Down about 1% for the small caps. Down about 0.75% for the mid cap as well. So the market breadth looking very, very tentative today. But the large cap action and all about IT, to be honest, and Pharma, of course, needless to say. So Reddy's, Cipla and Sun Pharma from the large cap pharma space, Infosys and TCS. Look at Infosys go. More than TCS, it's Infosys which has really rocketed. Tech Mahindra is up about 1.5%. And Bajaj Finance continues to rise and shine. Not to forget Lupin, of course. But Bajaj Finance continues to rise and shine. Arguably the man of the match the last few days in addition to the pharma names. HUL finds some favor as well. Good going there. What's lost out? Commodities. So Hindalco, Ultratech, Cement, ONGC, Coal India amongst others. And banks. So Yes Bank is down today. SBI is down today. So select banking names too have looked slightly wobbly. Oil and gas by and large, the likes of ONGC, IOC, BPCL, just showing that there's a lot of pain, negating the kind of gains that the exporters tried to give in the session today. But clearly, as I said, while the large caps have done okay on balance, led largely by the later surge in IT, can't say the same for mid caps. There is pressure there.
That's right, Neeraj. The broader markets came under pressure severely in today's trade. But let me start off with a couple of stocks which were up. So Tata Investment went up probably on back of that news of TCS buyback. The company holds almost 10.5 lakh shares in that, which is worth nearly 200 crores. So 9.5% gains for this one. Aarti Drugs was quite active today on the upside. So that one's closing with gains of nearly 12%. Take Solutions, that too was strong. There was some buying momentum seen for this one. The stock is finally closed around the mark of 300. RPG Life Sciences, the company posted its investor presentation on to the exchanges, and post that we've seen some positive reaction coming by. We also spoke to the management during the show, and they indicated they're expecting a good earnings trajectory going ahead. In fact, they also said they expect their revenues in the next 3 years to touch almost 1,000 crores. Strides Sassoon from the pharma pack has been witnessing some bit of longs in the last few sessions. So this is one of the other pharma stock which has seen good gains in today's trade. Berger Paints, I guess, in the second half of the session, this one went up. So that's also closed above almost highs of the day, 2.5% higher. On the losing side, Idea was quite weak today. It did see cuts of almost 3.5%, closing at day's low. Something like Jubilant Industries, which has been going higher in the last two sessions, today saw some bit of profit booking, down 8%. MRPL touched its fresh 52-week low in today's trade, so watch out for this one on Monday. And from the metals pack, which came under pressure, Nalco was down. In fact, that was the top loser in the Nifty Metals Index.
Well, so that's the picture at close. Will come up adverse market breadth, but IT leading the indices higher, and therefore the Nifty ending higher for the day. For the weekly picture, actually before we get the weekly picture, the volumes should come up on your screen for just a moment. Just see what the volumes are looking like. I think the cash market volumes picked up. Yes, they have.
37. It's like 10,000 higher from yesterday's.
Yeah. It was 19,000 at about 1 p.m. Navneet.
Yes.
So next 2.5 hours, that's another 19,000 crores added. That's a significant amount of volumes that have picked up today. Volumes
definitely have picked up, but I don't think there was any sort of block deal which took place in the second half, but we'll see where the major buying came in probably with the data we get post-market hours.
And maybe interesting to see what the institution volumes look like as well in today's session.
Yes, that will be quite interesting because DIs have been supporting this market, FIs consistently. I remember yesterday also the sell figure was above 1,000 crores. So let's see whether there was some bit of buying which came back from FIs or not. But Neeraj, the F&O volumes as anticipated after the Bank Nifty weekly options expiry, it's now averaged around the level of 6 lakhs.
Yeah, and also I'll be interested in seeing the delivery percentages in the large cap IT names.
TCS and Infosys for sure, post the buyback news.
So it should be interesting to see if indeed, I mean, a small fragile part, but let's wait and watch what happens there. Okay, so that's the turnover, of course. Let's bring up what the week has looked like for the large caps and the mid caps. No surprise there, Navneet. It's all pharma. Maybe to an extent TCS features out there, but it's all pharma really.
Yeah, and to some extent I guess IndusInd Bank is also there, but it's getting lost in that list for sure.
Yeah, 4% higher.
Yes, IndusInd, TCS also owing to the gains probably one would have seen in today's session, and Reliance was taking baby steps throughout the week, so that's up almost 3%. But clearly, I think the week belonged to the pharma pack, Neeraj. The Nifty Pharma Index was up almost, I think, 7 to 8%. If we could just pull up that too. And on the losing side, let's just address this first. The metals pack was under pressure, so Tata Steel, the top loser, down 6%. ONGC was down, and IOC Coal India, Vedanta, all these stocks have been under pressure.
Actually, yeah. So we can pull up the Nifty Pharma Index 5-day performance and then bring up the mid caps and the small caps as well. Okay, let's get the Nifty Pharma first. That's up about 2.5%. This week about 8%. So Navneet was right. And then, of course, get in the mid cap and the small cap stocks as well, the NSE 500 index. And let's see what are the gainers like. Don't see too many pharma names though at the NSE 500 level.
No, not much.
Yeah.
Only Dr. Reddy's features there.
And Alembic Pharmaceuticals about 19%. But in today's session, a lot of pharma names were up and about. But interesting assortment of names here, really. Jaycorp up 20%.
Take Solutions was up today, I guess. ITDC has been going up last 2 sessions.
And Vakrangi and PC Jewelers up about 14-15% apiece. Graph Finance, look at that. Quality is correcting big time. Rain Industries is down about 8%. Coromandel down about 7%. It's an interesting list this week. A lot of sketchy names have moved up. A lot of good names have fallen off. Interesting moves there.
Yep.
Anyways, let's get in final thoughts from our experts. And Manav, based on what we've seen this week and the kind of support that exporters have given, does that enthuse you enough for next week?
Absolutely. When we look at the charts specifically for the pharma stocks, after a good series of decline which has been prolonged for more than 15-18 months, and the kind of a base formation we've seen and the breakout that we are observing with volumes and the confirmation coming on the weekly monthly perspective, I think we could see this upside move continue for at least for next couple of weeks. And I sense that in case if there is any short-term consolidation or a pullback into these stocks, I think one can look to buy them and expect an upside of at least 10-15% all across. I think from this space, my top bets would be on Glenmark Pharma and Cadila Healthcare. Both these stocks have formed a very good base, and the breakout has shown on the high time frame chart. So these stocks are currently providing a good margin of safety, but I sense that at least a small pullback or a consolidation would give you a better margin of safety for entry at lower levels.
Okay, Sarvendra, what about you? Largely the view has been negative from your side, but going into next week, what's the sort of range that one can expect on Nifty, Bank Nifty?
See, I'll believe that Nifty would probably be in this range of between 10,900 to 10,400. So, and we are saying that we are going to revisit the lower end of this range. So that's been the trade that we have taken today. So my sense would be that next week could be a down week, and we should start this correction anytime soon. For the Bank Nifty, I would say we just kind of scraped through today and just kind of held that 26,250, 26,300 support area. So as long as we are doing that, we might spend some more time. But once 26,250 breaks on the Bank Nifty spot on a closing basis, I think you would see a shift in the momentum downward there as well. So by and large, I think next week will be crucial. This we have been saying for the last couple of weeks, but both the Nifty and the Bank Nifty have been stuck for I think Bank Nifty is just stuck at 26,500 for now the 7th week running, at 200, 300 points on the upside and downside. So that it's a 600, 700 point range. But the VWAP, on a VWAP closing basis, I think 26,500, 26,600 is where we are on the Bank Nifty for the last 6 weeks now. So it's a little boring. We've been waiting for the next tick down, but ideally it should happen. And coming to the volumes part, if I'm not wrong today, why the volumes have been so great today, and we should take it with a pinch of salt. If I'm correct, then today was a FTSE rebalancing. It was our last day. So post 3:30, you saw names like Reliance garnering almost 50-60% of the daily volume. So my sense is that incremental 7,000-8,000 crores that we have had today is more to do with the FTSE rebalancing. So we can always take this with a pinch of salt. In fact, the smarter guys who would be selling into this rebalancing could actually take some money home when the price is correct.
Okay, Sarvendra, thanks for that information. And on that note, thank you both of you, Sarvendra as well as Manav, for joining us today and taking us through your technical views on the markets.
And with that, it's a wrap on this leg of Countdown from Navneet and me and the team that put this show together. Thank you so much for watching.